Hello everyone, very good morning, good afternoon and good evening to all of you. This is your host Vaibhav for today's session of JForex Indicator Explained. We will be looking at an interesting price formation which is majorly used as the bearish reversal pattern. The name is Hanging Man, and as obvious as the name is, this pattern also is negative for the traders who have been long, or for the investors who have taken a long position in the stocks or any other financial instruments of their choice. So this is a bearish reversal pattern, and we have to pay attention to the price formation to look for the exiting opportunities in case of the prior profit, or if you want to go for the initiation of the new trade. In that scenario also, this pattern can be utilized to look for the optimization of the trade. So let us now head to the JForex for the newly released trading platform from the Dukascopy Bank SA. This is the Euro USD chart on the hourly candlestick time frame. Here, if you want to know where this pattern is, go to the add indicator option. There you will find the list of pattern recognition, and amongst the pattern recognition you will have this Hanging Man. Here it is, just below the hammer. Or you don't have to take this much trouble, simply do a quick search, type in Hanging Man, and you will have it on the chart. Now here we are not really seeing any Hanging Man bracketing formation on the chart, and that is because in last couple of days it doesn't appear to have formed. It is not going to form every day, and this is a rare formation, and also the place of its formation is going to be of significance because it is pretty much similar to the hammer pattern, but where it forms goes on to define if it is going to be called hammer or if it is going to be called Hanging Man. Now this appears to be the Hanging Man formation, but when we see this kind of formation on the chart, we will have to look at the volatility in that candle, and in this case we need the closing and the opening price of the candle to be around the same price level, but we need its shadow to be long enough. And how you will make the assessment of what is long enough, for that you will always have to consider the recent price action, the average volatility in recent period, and depending on that you can make your own measure of what is long enough. So if we look at the prior price formation, the shadow of this particular candle is not really long enough, so we can omit this formation and start looking for other instances where it might have formed on the chart. In Euro USD, it doesn't appear to have formed that much in recent times. Here it is, let me check. Yes, it is also the Hanging Man. Now in this scenario, if we look at the shadow of this particular candle, it is almost around the same levels, the kind of volatility which we have seen in the prior candle. So that makes it more reliable. And now its place, as I said, the formation is also defined by where this particular candle formation is taking shape. And as the Hanging Man is a bearish reversal pattern, we have to look at the prior price gains, and if there have been substantial gains and now the Hanging Man candle is appearing on the chart, that means it might be the time for profit booking if you had the open trade on the long side earlier, or this might be the time to start looking for the initiation of the short sale trade around the price levels on which the Hanging Man candle formation has taken shape. Now the logic of this Hanging Man is simple. It means in the initial time of the candle period there was selling pressure, but that initial selling pressure was overcome and the closing value is more or less around the same levels of the opening price. That means whatever selling pressure was there, initially was not really sustained, and the buyers were able to get back the price where it was at the initial time. Now this signifies two things. One, that if there has been significant price jump in the prior candle period, and now it seems that the sellers are coming into play, that means the prior uptrend might be in a situation where it might have run its course, and this might be the time for profit booking. Or if you are seeing that even in an uptrend new selling pressures are emerging, though not sustained, but still that is the ominous sign, and it calls for the closer evaluation of the price action in next couple of hours, and then of course possible short sale trade. So this is what we are seeing in this particular instance. Also, there is significant price rise in prior hours, and then this hanging man candle formation takes shape with the long enough candle. And as I said, how you will define the long enough is simply dependent on the recent volatility. So using that as the measure, you get this idea of what is going to be enough for this shadow on the lower side. Then once you have these requirements in place, you will have to pay attention to the price action for next couple of hours, and even the next very next candle is going to be of significant importance. If you see that the selling pressure is again pushing the price lower in the very next candle, then you can have that as the confirming factor and go for the initiation of the short sale trade around the high of this candle, while keeping sufficient enough buffer on the higher side. Now in this instance, if you were to short it, you might have indeed made profit, then again reversal, and then this consolidation phase starts. Now if we look at this instance of hanging man formation here, there is not much of an price volatility in this particular candle. So because of that, we will have to eliminate this instance and not go for the initiation of the trade. Now let us search for more examples which can be used as the representative tools. Now in this case also there is not much of an volatility, the shadow is really not long enough. We want the hanging man formation shadow to be long enough, and that can be used as a filtering mechanism, because as is the case with any other indicator, the same thing applies for the hanging man formation. Not all the hanging man formations are going to have equal chance of giving you right entry or exit points. Not all the hanging man formations are going to create profitable opportunities. Some of those formations are going to have higher probability. Some of these formations are going to have lower probability. And even if you have everything in place, still the trade might go wrong. So for that, the only thing we can do is get the stop loss in place. Now let us look for more examples with the requirements being fulfilled. We are being forced to go back in time to almost November now. Now in this case, its length appears good enough. The volatility was quite low, and then this hanging man formation took shape, and we did see the price continuing to trend downward for next couple of hours. In this scenario, the formation looks good enough, but it doesn't really help in this scenario. Even if you were to go for the short sell trade, that trade would have ended up in loss. This should be overlooked. Now this is good enough, I think, and in this case you would have indeed been able to make a decent amount of profit in line with the volatility, the kind of volatility which we had seen in the prior hours. This also looks sufficient enough for the initiation of the new trade, and if you were to go short closer to the high price of the hanging man candle while keeping sufficient buffer, this trade would have indeed brought in good amount of profit. So these are the kind of formation where you will have to apply additional filtering requirements, because as I said, not all the hanging man formations are the same. You need good enough volatility in that particular candle, which should be in line with the volatility, average volatility, which has been seen in the recent hours. And then maybe if you feel like, you can also add the factors like trend defining mechanisms, any particular indicator combination, or any other formation can also be utilized to complement the hanging man formation. Now let us see what are the customization options available to us on the platform. There is nothing we can do in terms of the input, as this hanging man formation simply depends on the input of a single candle. Output, all you can do is go for a different color combination. If you are not really a fan of this blue color, maybe you can go for brighter shades or a different variety of color. Styling combination, you can go for a bracketing enclosure, or you can even fully color that particular candle. So these two options are there. The bracket things looks good enough. Then you can also go for increased or decreased transparency. So that option is also available on the platform if you want to make this look less prominent. You can go for this high transparency. Advanced editing option, recalculate on your candle only. This is not going to cast much of an impact on the total ultimate outcome. Highlight the time period zone, only single candle is going to be highlighted. We can't customize the calculation data, so this option has been disabled. Now we can have this indicator available on the candle period of our choice. So for that option, we can specify on which particular candle time frame we want it, and accordingly we can select these options, and only on those chosen time frame this particular formation will appear. On other time frames it won't be available to us. And we can have different types of indicators added on the chart on different time frames, so we can collect all those data points and make informed trading decisions while having multiple indicators, multiple formations on different time frames. So that is going to also increase the profitability while making sure that the chart is not looking too cluttered or too complex for us to make a comprehension of the data. So that is the utility of this option. So with that, this is all there is for this formation. I should not say there is all there is. This is all there is, because no amount of knowledge is full. We can always learn new things. So whatever I have explained to you in relation to this formation is merely representative, and you can always come up with new ways to work around and find the utility of this formation for increasing the profitability of your own trading system. So that's all from my side for today's session. If any of you have any query or any idea to share, do write to me in the feedback, and I will be more than happy to take the discussion forward. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there too. For trying out these newly released trading platforms, the link has been included in the bio. So give it a try and let me know how it works out for you. So thank you all for joining in. I will be back tomorrow with a new interesting formation, new uses to talk about, and many new other things. Do come back.